Alright guys, in this video I'm going to make the bullish case for Bitcoin. It's one of the most important videos I'll record, and also one of the most difficult videos I'll record. Not because it's hard to make the bullish case for Bitcoin, but because it's hard to do it in a way that doesn't take several hours, because there's so much you could talk about. In order to do that, I think I need to start from first principles. Fundamentally any market is driven by supply and demand. But really, I think even though supply may be more important for the price of an asset, which I think it is, I think I need to start with demand to establish the need for Bitcoin, right? Because without demand, you don't have a market, right? There needs to be some fundamental demand. And fundamentally in Bitcoin, I think its most important use case and the quality that gives it the most value is its censorship resistance. And that may be a little bit different than the opinions of others because, people have all sorts of opinions on why Bitcoin is valuable. But I do believe that censorship resistance is its primary value proposition because it's so unique in that regard, right? There's no other asset that has ever done that. There's no other form of capital that has crossed borders freely that can essentially bridge a transaction between two parties that don't know each other without the need for trust or a trusted intermediary. And this is something that's obviously discussed in the Bitcoin white paper, but it's a revolutionary thing. We've never had anything like that. We've always relied on trusted third-party intermediaries. Well, these intermediaries are, subject to corruption, and that story of that corruption kind of is where we are today historically with central banks and all that craziness. And I don't think that central bankers necessarily realize just how Bitcoin has already destroyed the need for them in the first place. In my mind, just assuming that the Bitcoin network continues to not only grow, but just continue to secure the network, continue to generate hash power. The need for third-party intermediaries between transactions is greatly diminished, and the people providing those services will be irrelevant in 10 years. And that's a major phase shift that I don't think is really understood by the market, and it's very radical in the way it will reshape society. Another way that censorship resistance will reshape society is the fact that capital will cross borders in a way that's just can't be controlled, right? There's, theoretically, gold is censorship resistant, but it's very expensive to transport, very slow and very difficult. It also requires an extreme amount of security. I mean, if you have a lot of gold, you need an entire army to guard it. And of course, people can use their army to attack your army and take your gold. Bitcoin can cross or go around the world instantly with no trusted third-party intermediary. If people try to clamp down on it in China, it can just flow across borders to America instantly, and there's nothing any government can do about it. And that changes everything. I mean, the Chinese model of capital control won't work in a Bitcoin world, right? You can't. Their whole civilization model is based on, manipulating their currency and then restricting their capital markets. In a Bitcoin world, that just doesn't work, right? Capital flows freely to where it's best used. And, that's a good thing because this opens up governments to free market forces, right? It forces them, different nation states, to compete with each other to, offer, rather than create capital controls to restrict capital within their borders. They have to compete with one another to pass favorable legislation and, tax laws that encourage capital to flow to their jurisdiction. And it creates a positive feedback loop where, the more favorable policies are created, the more capital flows to that jurisdiction, which creates more favorable policy and so on. And it's a scenario you can see how it's just, it's synergistic with the free market. And, fundamentally, if you believe in the free market, which is just all the free market is two different parties able to transact with one another without any interference at all in that transaction, which is exactly what Bitcoin creates, exactly what Bitcoin makes possible. It is the free market. So if you believe in free market principles, you should also believe in Bitcoin, because it has unique properties that allows the free market to express itself in nature. So, censorship resistance, of course, is extremely new, right? We've never seen anything like that. And I think it's a demand that's not really priced into the market, right? Because, most of the world may not understand the need for that yet at this moment. But some do. I mean, we've seen major capital restrictions on the sovereign level with the freezing of Russian assets during the Russian-Ukraine war. Russia's central bank assets were frozen by the U.S. Treasury. So, that, of course, is a major world stage event that broadcasts to the entire world the importance of censorship resistance, right? If you have capital that can be stolen at any moment, well, you don't really have that capital. And you certainly can't rely on it in times of trouble. So you can see how censorship resistance and pristine collateral are one and the same thing, right? It's, what is a risk-free asset other than something that is highly liquid and highly dependable in times of crisis, right? That is a pristine collateral. And the only thing, it doesn't do you any good to have a low-risk asset that becomes extremely risky in times of crisis, right? To seizure and capital controls and all that. That's not a low-risk asset. That's a high-risk asset. Again, it's the asymmetric risk where you want to consider the risk of the asset in those times of crisis, right? That's when it's important. So again, it's just a long way of establishing that the fundamental use case for Bitcoin is its censorship resistance. Now, of course, most people don't get attracted to Bitcoin because of it, that they get attracted to it through the prospect of being rich, right? Bitcoin bootstraps people's greed for good. And that's something that can't be said about any other system in the world, right? There's no other system in the world that takes human greed and transmutes it into something that is favorable and good. And the reason for that is the proof of work system, right? Proof of work. A lot of people are debating proof of work versus proof of stake. Well, proof of work is that system that transmutes human greed into good. And the reason why that is because it takes people's natural incentives to make money and to acquire resources and channels that into the network. And as people spend more time in the network, understanding the network, having their capital allocated to the network, then they naturally become defenders of the network. They'll secure the network themselves, encourage others to secure the network. And another good way to illustrate this point is to talk about the opposite of that, right? One thing that is, fairly obvious now in the European energy crisis, the energy shortage in Europe, is that money that doesn't take energy to create is not money at all. And that is fundamentally the difference between proof of stake and proof of work. The energy crisis just exposes that very dramatically. But think about, somebody anybody, average person, right? You or I, or just your your neighbor or just the average person, they have to trade their time and labor for money, right? But then there are some people out there who can create that money for no cost, no time, no labor, right? That's a fundamentally flawed system because it does the opposite of Bitcoin, right? It hijacks human greed for exploitation and for to exploit the system, to naturally siphon the time and labor of the people contributing to that network who are only able to acquire money from the network by contributing time and labor. And it encourages those who don't need to do that to siphon the value from those who do. And of course, that's where we are now, right? Going back to the third-party intermediaries, Bitcoin in its censorship resistance allows transactions between two parties who don't know each other and don't trust each other without a third-party intermediary. Well, those third-party intermediaries are the same people who control the system currently, who are able to produce money without expending time and labor. And they're taking their cut, right? They're siphoning off the productivity of the human race. So fundamentally, any money that is truly money needs to take energy to create. And that's exactly what Bitcoin does, right? It's proof of work. You have to contribute energy to the network. You can't create it out of thin air. And no, energy use is not bad. Energy use is good. Everything that we value in society takes energy to use. Energy is not a bad thing. But again, as and just tying back into the theory of how it hijacks human greed for good, you can see how as people in this proof of work system contribute their time and energy to the system, then their greed incentivizes them to protect that, right? To further secure the network, to protect the time and energy that they've already contributed to the network from, further degradation or degradation at all. And, as more other people see them profiting from that pursuit, they will join the network and, go down the same path where they contribute their time and energy. Because again, remember, there's no way to acquire Bitcoin without expending time or energy, right? Even if you're, of course, if you print fiat currencies to acquire it, that's a different story. But the window for that may be running out. And the reason why the window is running out for that is we have to go to the supply side of the equation. And, so while I talked about the demand side first, the supply side is more important if we're concerned about the price. The reason for that is because price cannot change the supply of Bitcoin. Demand cannot change the supply, right? No matter how high demand goes, supply remains the same, right? No matter how low demand goes, supply remains the same. Bitcoin has a fixed supply. The difficulty adjustment adjusts every 2 weeks. No matter how much hash power you contribute to the network, as a form of demand, you can see hash power as a form of demand. No matter how much you contribute to the network, the supply schedule is fixed. It adheres to that fixed supply schedule, that ever-receding horizon. No matter how much you want to mine more Bitcoin, you can't do it. You just can't. So, but contrary to that, the supply of Bitcoin a decrease in supply can cause an increase in demand. So it's asymmetric in the way that demand and supply relate to each other, right? Demand can't influence supply, but supply can certainly influence demand. And that's because scarcity creates demand. Any salesperson knows this concept, right? If you want to sell something, you have to create a sense of scarcity. It doesn't have to be real. It can be real, but you can also just create an artificial sense of scarcity, and that will create demand within the person you're trying to sell something to. And that's how you get this incredible feedback loop in Bitcoin that's extremely positive. You know, everybody's talking about different macroeconomic forces right now. You know, they're talking about what the central bank's doing, which is at the top list of like what's most important, right? Are they printing more money? Are they not printing more money? That's really the only thing that matters, because Bitcoin is fundamentally a hedge against monetary debasement. And again, not monetary debasement in the sense of, it's important to distinguish between monetary debasement and the cost of capital. So if more dollars are printed, that's what we're concerned about, not so much the cost of capital or interest rates. Again, not an important distinction for this video, maybe for a different video. But getting back to the Bitcoin supply side, most people are concerned about macroeconomic forces, central bank policy, all the way down to, you know, stupid economic numbers like, you know, jobs reports, earnings reports for companies. I mean, it doesn't matter at all, man. That does not. What matters is the Bitcoin supply schedule, right? There's 21 million Bitcoin. And again, going back to what I said earlier about scarcity driving demand, once the market, you know, gets a taste for that sense of scarcity, demand will increase in line with that. And if demand increases dramatically against the backdrop of a diminishing inelastic supply, price will go absolutely parabolic. Bitcoin supply is controlled by, you know, what could be described as illiquid wallets, cold storage wallets that have basically held Bitcoin for a year with an indicated or demonstrated no indication to distribute. That's over 70% of the circulating supply. Now, I've done a few figures and ran a few numbers, and it wouldn't take you that much money to buy up all the circulating supply, but all the liquid supply that's held on exchanges and readily available by different parties indicating a willingness to sell. It would only take you a very small amount of money in the big institutional terms to do that. So you have this diminishing supply schedule, and demand is relatively, unpredictable, right? The only thing we can really say about demand for certain is that we know it's unpredictable and we know it will oscillate, right? People who say that it will remain high forever are full of shit, and people who say it will remain low forever are full of shit. Demand is driven by human emotion, right? We can try to predict it. We can make all sorts of theories about what it will do. But fundamentally, emotion is unpredictable. It's volatile. But we know it will oscillate, right? So maybe demand is low right now, but it will be high at some point in the future. So we know that. And we also know exactly what the Bitcoin supply schedule will be. And we know that when demand oscillates, ticks up into that inelastic supply, it's just supply and demand. Price will go parabolic. Now, if you play this out to its nth degree, you have 21 million Bitcoin and 8 billion people in the world competing for those 21 million Bitcoin. And that's really the future, right? That is the trade, right? If everybody is like, everybody wants the big home run trade, right? That's the home run trade. It's staring you right in the face, right? 21 million Bitcoin, get as much of it as you can, as fast as you can. That's it. That's a home run trade. Now, there are different methodologies to doing that. And, everybody's got a different strategy. But this is the modern land grab, right? If the ships just landed on Manhattan, You want to lay claim to the greatest fraction of that monetary network as you possibly can. Because in order to do that, you need a high degree of conviction. And conviction, it's not clear how it comes. It seems to come suddenly, but there's certainly an element of time to it and time spent educating, right? So, maybe you don't have that type of conviction at this point, but you understand the importance of having that type of conviction and you want to develop more conviction. Well, that's a great place to start. You can set out with that goal in mind, and there's a ton of educational content out there. There's a ton of books written by some really brilliant people, and you can just absorb all that information, right? That's kind of a unique thing that is available at this phase of the Bitcoin market, where people have been, people who are not technical have been able to express these ideas and put them into literary form, and really, the orange pill doesn't really stop anywhere, right? The rabbit hole has no bottom, right? Even people who have been studying Bitcoin since its inception, they're still learning things. So that's interesting and exciting, and I think the carry-on effect from that is that a lot of the models that we use to describe reality right now are going to be broken in the future, right? There's going to be a set of governing principles that are helpful in the future that nobody's talking about now, right? Because this is like it's a new thing that's happening, and it's going to have a radical effect on the world. So I think fundamentally the best thing to do to understand Bitcoin in a roundabout way is to hold it, right? So it creates this catch-22 scenario where, well, how do you build the conviction to hold it before you have the conviction? Well, that's tough to do. Maybe find some roundabout way to do it by accident, but for whatever reason, people aren't really able to fully understand Bitcoin until they hold it. Now, the carryover effect from that also, I think, and this may be a separate idea, but I think when we look at, different performance of different funds and different financial investments, I think the Bitcoin market, or the performance of the Bitcoin market, will be the benchmark that everybody relates to, right? Even in its initial phases, while it's still priced in fiat currencies, that will be the benchmark, right? Most guys on Wall Street have not even come close to Bitcoin's performance over the years. These are guys that were, trained in Ivy League. They're making 20% returns a year in USD terms, and Bitcoin's up, hundreds of thousands of percent. So, and even in the end, when Bitcoin is no longer trading against fiat currencies, it's just Bitcoin, right? It's not trading. It has no trading pair, right? It's just, you're just denominating Satoshis probably at that point, right? 100 Satoshis for whatever you're buying. Even at that point, it'll still be a benchmark, right? Because it theoretically at that point would be a benchmark for the overall productivity of the economy and humans in general. Again, I don't want to go too far down the rabbit hole in this video, but again, tying back to the original idea, censorship resistance is fundamental to Bitcoin's use case. It's fundamental to driving demand. It's way underrated. But, suddenly there's a need for censorship resistance because we've seen an increase in capital controls as of late, both on the individual level and the sovereign level. And as that demand driver hits the market, the supply is inelastic, supply will not yield to that increased demand. And I think we'll see price go pretty parabolic over the next decade. Anyway, I hope you guys like this video. If you guys like this content, again, just make sure to like the video, subscribe to the channel. I'll catch you guys in the next upload.